Do you look at every tweet from the president and, change your models? Do you wait? What are you waiting for? What would be the catalyst for this to be, a sea change in how this trade tit for tat is going?
Well, I mean, it would tell you how much the world has changed if we modeled it after tweets, right? But it does seem like that's actually kind of how markets are behaving these days. I think that the reality is that we have to assume that there is some basic rationale for escalating trade. And if the trade escalation is based on winning 2020, then I think that's the real downside. But, I don't think a 2020 Republican win is possible with an escalation of the trade war.
Say that again, Tom, because I think that's very important, and it's essentially a little bit akin to what Dudley was saying yesterday in that opinion piece. Not exactly, but people are throwing out the idea of a non-Trump presidency the next time round.
Yeah, in fact, that's something we sent it to our clients yesterday. That there's actually quite a lot of constituents cheering for a market crash. Democrats kind of want that. Short sellers kind of want it. Europe is kind of cheering for it in a strange way. And anybody who hates Trump wants the market to crash. So I think in the reality is that an equity crash, which is really related to trade at the moment, is actually supportive of someone who's against Trump. Or in other words, it's almost political that if someone wants the market to rally, it's almost a pro-Trump view.
Okay, and the corollary of that is that if that's the case, won't President Trump do anything and everything to ensure that doesn't happen?
Yes, and I think that's why he's been, kind of highlighting and spotlighting the Fed, because I think he needs the Fed to be supportive. The Fed's done their job, and I think at the moment it's really trade visibility that is the sort of linchpin here, and I think the key is not to escalate trade war. And obviously, I have no say in it. I'm just observing it. Only a few people in this world are actually going to control what happens with that. And I think in 2020, a Republican win is going to be very difficult if the trade war is escalating.
So Dudley's piece sort of blew it out of the water that if the Fed were of a mind to, it could become a more political body than it is. And the Fed pushed back and said, absolutely not. That's not our mandate. That's not our constitutional, charter. So how do you interpret what the Fed does next? And what does the Fed do next?
Well, I think, I think Powell's mandate, even though maybe it's explicitly just unemployment inflation, really, the Bernanke actually talked about it. Financial stability is actually, really essentially the third mandate. And I think we are approaching conditions that really question financial stability. We have a drop in rates, an inversion of the curve that you point out, it's so prevalent. And if it's not related to economic fundamentals, then it's telling us that it's a dysfunction of the financial system. So I think a lot more easing is actually required. I mean, I think the Fed needs to cut a lot more than even the Fed futures are projecting. Fed futures are maybe talking 50 by the end of the year. I think we need more like 75 or more.
And if we don't get it, Tom, what's your forecast for the S&P at the end of the year?
Well, it's 75 is because at this moment this is what the curve is telling us, right? 75 is required to actually even bring the Fed funds below the 5-year. Now, if we get a trade de-escalation, I think the rate structure is going to change because this sort of TINA and buying safety and U.S. is going to alleviate. And so I think rates rise, and that's bullish for stocks. And that would really change what I would perceive as required Fed cuts. So I think it's a dynamic question. I think at the moment, last year, the central bank was really an obstacle to markets' minds because we were talking about autopilot and cuts far away from neutral. The Fed's completely changed its communication. I think that's a positive this year.